Gold is losing favor at the moment. In this video, I discuss short-term and possible long-term targets for the metal. Hello everyone, it's Sajad. Hope you're having a great weekend. So, further from my last update on gold, we're reaching very critical levels. We're going to have a quick look through the news first and then we'll have a look at the chart. So Jeffrey Gunlack says Bitcoin may be a better bet than gold. A lot of other hedge funds have moved to kind of a neutral position when it comes to gold. So this is the narrative at the moment. US retail sales surged in January, beating all estimates and suggesting fresh stimulus checks will help spur a rebound in household demand. Now this is a comment from Ole Hansen, which I actually agree with. He said next 48 hours will be key for gold. I actually think it's the next few days. I think this week and potentially next week, but more likely in the next few trading sessions, we will know the fate of gold in the next 6 months, as I'm about to show you on the chart. And I don't think it's particularly worrying due to inflation expectations that gold moves down first. I think it's further down the road when inflation really kicks in. As I've mentioned right through this year, especially on my last few videos, I think it is inevitable and you don't need to look at a chart to see that inflation is already creeping in. You'll see it all around you. Things are getting more expensive. We are actually seeing early signs of potential inflation in the data now. Bond yields higher across the world in recent weeks. For example, in Germany, although not much of a move at the moment, we do know historically inflation can potentially gather pace and then move quickly. Now this is the scary news. So IMF are saying there's limited inflation risk from Biden's $1.9 trillion plan, and US price gauge seen unlikely to persistently surpass 2%. This is the scary part right here, because clearly these people are not looking through the history books and they're not seeing that once you get that inflation in the system, things can very rapidly spiral out of control. And that's why I believe it's still going to happen, and we're already seeing the early signs of this. And this particular chart, as has probably been discussed elsewhere, the CPI, it says annual US core inflation eased in January while headline figures saw no change. We know this is complete rubbish. But what's very interesting is what happens with inflation when it comes to the price of gold. Now, last time I did an update for gold, I was having a look at this kind of longer corrective sequence, a WX, YX, Z, moving down into this kind of target zone. Now gold has been slowly moving down and we're not quite there yet, but very likely if you get another push down, we will be in this target area. So between 1750 all the way down to 1690. And I expect, I mean, it's not 100% certain, but I expect that the price could move into this area. Now, if it does, that's the key. What happens from here? Was this all a correction? And are we going to get a next leg up? And if we do get another leg up, that is so significant because that could be the leg that pushes gold prices to well over $2,500 and approaching $3,000. That's the key. And if it breaks down from here, which is the alternative scenario, the problem there is as we break through these support zones, there are some very key zones, which I'll show you in just a minute. And that might result in gold retracing back to kind of early 2015, 2016 levels, which again, I'll get back into in just a minute. What I've got here is a weekly chart, and comparing here prices, I've got the tips. So that's Treasury inflation protected securities. And this is another type of bond that's supposed to protect you inflation, but the prices are going to be based on that kind of fake core CPI number. But notice there is a strong correlation, especially over the last kind of decade or so, between the price of gold and also the tips. And if you have a look closely at some of these peaks, what you can see is that sometimes, but not always, the tips can give you a kind of early marker or early sign, because you can see that there's some divergence now between gold prices and the tips, which is moving further down and kind of breaking support. Now, why is this important? The problem we have with gold is if you look back over say 30 or 40 years, it's hard to kind of find a very clear correlation between the price of gold and inflation or kind of deflation based on CPI or any other measure. It's very difficult because we live in a unique time right now where we've never had this much kind of Fed or central bank involvement in terms of what they're doing with interest rates, even potentially bonds and yield curve control, etc. So it is unique right now. But what could potentially happen is if we are seeing inflation creep in, but if that's kind of hidden under the rug there with those kinds of markers that the central banks use, any little bit of inflation will be welcome. And historically that's considered good for the stock market. If you get a little bit of kind of 1-2% inflation, something like that, then that's fine, that's healthy, that shows the economy is in recovery, when we really know that that's very worrying in this type of economy that has been reliant on extremely low interest rates for a long period of time. However, with regards to gold and gold sentiment, what that would mean is very likely gold will push down further. And the problem for gold is, as on this weekly chart, I've got a level mark here, the lows we actually saw back in 2015. We could potentially challenge those lows. So let's talk about some of the support levels in detail right now. So the level we're looking there is around 1050, and we could actually be in the early stages of pushing back down there. That is one potential scenario that you have to consider. But the only problem with that is when you look at this on a shorter term kind of time scale, like a 4-hourly, the structure does look very corrective. It's very overlapping. There is another way to mark this, which is a combination of 1-2-1-2 sequences. So now we get a fast acceleration. So that's what I'm looking for this week. If we do get a quick acceleration now in the price, and that's downwards, then these support levels won't even hold. You might get a little bit of resistance, push down, a little bit of resistance, and then an accelerated fall, where basically gold kind of loses its attraction amongst investors. And the problem for that is if we get through these key levels, this key area here where we had a decent amount of price action, not only recently in the past 12 months, but also previously, then I think the fall could be quite steep and severe. And we're looking then at the kind of support levels we saw in early March 2020. And we can see why potentially that could happen when we're looking at the tips, but we're also looking at things like Bitcoin and the fact that potentially gold could be losing favor. And when it does push down, if it does break through all of these levels, yes, it will absolutely push down. And that's why I think if it does move down, it could potentially accelerate. So this week we will move into this key level. Now, if this is the end of a correction that's completing, then I expect around the 1720 level, somewhere here in between, gold to find support, strong support, and then start preparing to consolidate but push up for a next leg higher, and that will be the end of the correction. And the reason these levels are very important is if you again have a look back, these highs we saw back in May, if this was potentially a 1, 2, 3 and then it's a larger 4, then we're actually already overlapping there, which means whichever structure ended here has absolutely completed. So this could only be a larger degree wave 4 now. So if you actually zoom out a little bit further, I'll show you what that means. So we're on a daily chart here. What we're basically saying is that initial move back in December 2015, if that was a first wave up, 1, 2, and now we've had a 3, now we're proceeding in a wave 4. Now this could potentially move a lot lower because that particular level is all the way down at 1370. So anywhere between then and 1370 and where we are now, we could find support and then potentially move up. It's just, for me, if we're breaking through these levels, it does start to look extremely bearish for the price of gold. And fundamentally it makes sense because once we get inflation accelerating, which I'm still convinced is going to begin to happen, it's going to start off slowly, which will be perceived as positive for the stock market. Stock market completes its final rallies, and usually that's in divergence to kind of the price of gold. So if we get that, gold continues to move down, stock market rallies for its final phase of this massive bull market, kind of like a blow off top. Then panic comes in because inflation starts running way hotter than what the Fed was expecting, and they start increasing interest rates, and then nobody can afford to pay the mortgages or anything else. That's when panic will begin, and that's where we'll see the real crash in the stock market. But also that's where we'll finally see that gold push that could potentially move gold up to 5,000, 10,000. I think that's all very, very much possible because it's going to become a crowded trade. Because what will happen with silver and gold is everybody will jump in. And the way it works with cryptocurrency, Bitcoin, altcoins, etc., and I'll do a further update on that very soon, is crypto moves in cycles. It moves in 3 or 4 year cycles. We know that now if you look back at the last 10 years of cryptocurrency. That cycle will end this year. We're currently in a bull market in cryptocurrency. That will end. When that ends, then we will get 80 to 90% correction in cryptocurrency. That's completely normal. History shows. That's where I think everybody will flood into gold and silver as a safe haven. I don't think that's going to happen yet. At the earliest, if we get a break here, we're looking at much later into the year. By the way, this correction down, even if it's severe, it can actually be quite short in terms of time because we've already consolidated quite a bit. So we could get a fast drop in gold and then we might reach some decent level of support in summer before we then get a massive move up in the price of gold. That's why I think potentially could be setting up here, but we will know in the next few trading days. Just keep an eye on these very key levels. If gold is slicing through these levels, then you know we're going to be very bearish for the next 3 to 6 months. If gold does find support and start to move up and is setting up for another leg higher, then you know that the inflation kind of scenario or perception is ready to go there and we're going to start moving up slowly. That's the time where you already can start accumulating, because one thing we know about gold as well, if you look back, wave 5s tend to be the absolute strongest and the steepest. So the rise could be very fast if we hold support in this region here. So let me know in the comment section below what you think. I'll probably do another update next week on this because, as I say, we'll probably know for sure in the next week or so which way we're going with regards to gold. But any massive swings, as I've said before, we're going to see this year because we're already seeing it in, for example, the price of oil, and I'm sure we're going to see it in many other precious metals. Thanks for listening, and I'll be back with another update soon.